I just had a call with a venture capitalist, a VC, because we're looking for investment for my company, Head Start Capital. Like we invest in hospitality brands in Indonesia, and yeah, we want to operate them because we feel like we have an edge with operating. And we feel like if we put our little magic touch on it, then we can actually produce outsized returns. So far, so good. Everything is working to plan, and we are drastically outperforming the S&P 500. Now, a lot of people, they warn you against the VCs, and sometimes, like, there's just a mismatch between the mindsets. Like, our mindset at Head Start Capital is we want to really follow in the footsteps of Berkshire Hathaway, Warren Buffett's company. We're really taking a long term approach, and the way we invest is investing in such a manner that we understand, like, if you've got your entire net worth invested in something, you're going to go about the investment in a very specific way. Like, you're not going to really go for maximum returns because often that means like taking massive risks or just rushing it too fast sometimes, like focusing too much on expansion. Like, if you focus too much on expansion, like you eventually get growing pains and, yeah, some people they can handle that better than others. Like some people that's their edge. Like they know how to expand extremely quickly and it's all in on growth. But we're taking like a 50, 60 year view. Um and like we could rush it and we could grow faster than we are currently, but then that means like 5 years down the line, like the foundation just isn't going to be built properly. Um, so yeah, there's just a mismatch when it comes to the different mindsets because if you look at it, like we're trying to create a holding company and we're trying to not get rich the fastest, or grow the company as fast as possible. We're trying to grow it as fast as possible, yes, but understanding the risks and we want to get there practically guaranteed. And obviously, with investing, there are no guarantees at all. But I believe we can make moves in such a way where it turns out to be like 99.99% chance that you never die. Like the company just keeps on growing. And if that's faster than the S&P 500, great. I feel like actually quite easy if you look for the right opportunities and do it in such a way. You can easily outperform it. But at the end of the day, it's like you got to protect the downside, right? You got to protect the downside. Like the ultimate risk in life is having financial ruin. Like, imagine you're compounding at 40%, 50% for 10 years, right? And become a multimillionaire, and then you blow up the whole company. You lose all your money and everyone else's money, and you got to start again from scratch at 40 or 50 years of age. Like, you're not bouncing back from that. Like, it's pretty hard to bounce back from that if it's your fault. If it's your fault that the company went down, like you've lost your thing, which is the reputation. You've lost your most important thing, reputation, right? Now, if for whatever reason, like there was something outside of your control, like, yeah, you could bounce back. Like, people always say, like, if Warren Buffett started from zero, like within 5 years, he'll be like a billionaire again. Because he could use his reputation. That's true. I believe it's true. Maybe not a billion, but it's up there in or easily millions, right? Easily millions, tens of millions, hundreds of millions. You can argue about the number, but he would bounce back and be wealthy by pretty much everyone's standards, right? But it's based on he did not lose his reputation. Now, our company is built fully on reputation, right? We've raised over $1 million from friends and family. These are people that really trust us. And, they're putting in significant capital, like significant size for themselves, a significant size for me as well. So the last thing I want to do is ever blow up. Like, if we can outperform the S&P 500 by, say, double, which so far I believe we are well and truly above that. If we can do that for 10 years, 20 years, 30 years, 40 years, 50 years, you turn into one of the wealthiest people that's ever lived, right? So that's our mindset. And I believe we can move in such a way where, yeah, it's actually kind of easy to outperform the S&P 500. Like, if the S&P is going up by like 10 or 11%, 12% just by 1 percentage point, it's like, honestly, it's really quite easy. 13, 14, 15. But the thing is, you just got to make sure that the idea and it is actually worth something. There's the ability, like people always say, like it's all about execution. All the value is in the execution, and that's true. Feel like most of the value is based on execution. But I don't know, like if you were to weigh up, like what is the value of the idea compared to what is the value of the execution, they're pretty close in my opinion. Because imagine you're working on something that's terrible. No matter what you do with the thing, no matter what you do with that idea, how good your execution is, it doesn't matter because you're working on something that's absolutely stupid. So yeah, like that's a bit of our mindset. Like we can grow faster, we can make more money now, but we're optimizing for that 50-year run. Okay. Whereas the mindset of the VCs, what they do is they have these really small investments where it's like 1%, right? They may even invest less than that. So that means they have like 100 companies in their portfolio, and all of those companies are like 1% investments. That's tiny. So when I was talking to this guy and I was saying, hey, I think we're growing at like 30%, right? 30% ROI. We're tripling the S&P 500, the average of the S&P 500. He's like, started getting quite aggressive and attacking. And maybe that's one of his strategies to see how I would handle myself in that situation, to judge my character. But the thing is, he's like saying he doesn't invest in anything that's producing more than 50%. Like, I mean, that's not performing, that's not producing more than 50%. Like, if it's making less than 50%, they're just not interested. And I say, like, I understand. I'm like, dude, I understand 100%. Like, we don't actually align. We do not align because I don't think anytime soon we're going to be compounding the whole entire company by more than 50%. But my comeback argument is, what is your investment portfolio compounding at, right? It's not 50%. When you place the investment, maybe in that moment, the company is compounding at 50%, but you know that you're investing in these high risk things where most of them are actually going to fail, right? So then after you work out your 5-year, your 10-year track record, and you work out what is the average results of your whole entire portfolio fund, where do they sit? Most of these VCs, they are not outperforming the S&P 500. Obviously, there's outliers. Like, I don't know what the actual stats are. Like, people chuck out the number like only 1% of investors can outperform the S&P 500. All right, if that's the case, 1% of the entire population of the globe is a lot of people, right? Millions and millions of people, millions and millions of investors are well and truly outperforming the S&P 500. So, yeah, it's just like sometimes these VCs or, other people, like, I don't know, I just found it like very egotistical. The way, like, just the way this person was speaking was just attacking and like looking down upon me, like, well, you can't make 50%. You're not capable of making 50%. And every time I'm just agreeing with him. Yeah, I'm not capable. I'm not capable. So please, let's end the call and go focus on those other guys. But I was just saying that, at the end of the day, the market is the market. Let's let the market be the judge. I'm pretty sure in 10 years' time, right? Maybe you have a bigger investment portfolio based on dollars because you've been in the game for like 20 years already. You've already raised a lot of money of other people's, other investors' money. You're managing their capital. Yeah, we're doing the same thing too, but we just started. We just started. We only started 3 years ago. I'm only 32. I just got into the game. All right. Not many people know about who I am currently, but we'll get you. We'll get you there. We'll get you over time. Now, you can judge it based on dollars, but yeah, and you have to have a bit of a weighting. Like the game and the scorecard has to do with dollars because if you can get a great return on $1 million, that's one thing. If you can get a great return on 10 million, that's another thing. Or if it's 100 or a billion, you change the number, it actually gets more hard. Like there's a lot of opportunities in the market, especially in places like Indonesia and other countries similar, where the market's not really that efficient. So with small capital, you can come in and make some pretty big returns. Warren Buffett is famous for saying like if he had small amounts of money, like he'll be producing way bigger returns than he is currently because he's just got that much capital. Like I think Berkshire is like what? It's like $1 trillion company now. Like they need to find these massive investments that can absorb his capital. Like you can't find these little opportunities, these little inefficiencies, like what you can when you're a small guy or a small investor. So it's possible actually to have like, if you got 100K, you can double it in a day just on the purchase. Like imagine if there's let's say there's like $1,000 of gold, and then that's the market rate for the gold, and then you can find somehow like a guy who's selling that gold or something else, like in this case a business, for half price, and you buy it for half price, you actually double your money. Now, that's not easy to find in Australia because the market's quite efficient, but in Indonesia, you can actually find that. You can actually find it, especially when it comes to businesses. Why? Because there's not like a standard market rate for businesses. Like people will say, like, oh, just chuck on, a multiple of revenue or something, and that's the standard. Um, but if you can look at the numbers for what they actually are and really interpret the numbers, and you can see like it with your touch, like you're an activist investor, you can change this based on your activity with it, how you operate it. You can double the thing like really quickly. So you can buy at a certain price, change things around, and then within 3 months it's worth double. Um, so, it's practically on the purchase, you can double your money. Now, if you look back at Warren Buffett's past, when in his early days, I think he was compounding like 50%. I think that was literally for an entire decade, maybe even two. So it kind of proves the point. Now, um, yeah, it's just like there's one mindset, which is long-term thinking. Another mindset is short-term and small bets. Actually, let me repeat myself. One's long-term thinking with high conviction. I really want to understand what we're doing, the ins and outs, every single aspect of our business, every single risk, every single opportunity. And then there's more of the VC approach. Like imagine if you invest into 100 different companies, there's no way you can actually understand all the ins and outs of all 100 companies. There's no way. There's actually not enough time to do all of the thinking. Like there's actually not enough time. And that's part of the strategy. The strategy is, by its nature, diversification. Hey, we do not know the outcome of all of our companies. We are taking high risk bets. That's why we need to be diversified. That is what they are doing. Okay. So I think, there is opportunities there in the VC world. I don't know, like it's a bit difficult when it comes to like VC investments into hospitality. Like it's really hard to grow a hospitality company like extremely fast above 50%. Like you can do it with tech companies, but like tech companies, they're winner take all markets. Like one company can 100x very easily. So one company, if you invest 1% of your portfolio into it and 100x's, you return the whole entire fund, right? Based on a singular investment. Now, it's hard to do that with hospitality. Obviously, there's VC funds that focus on hospitality, but yeah, I don't know, like the mindset and the approach has to be changed a little bit. That's my opinion. So yeah, I think it's just interesting, just a bit of like documenting the journey, just talking about my experiences where we are currently. There's going to be a lot more VCs that I think approach us down the line, but honestly, like a reason why I really want to start pumping out a lot more content is so you can understand my mindset. You can go like these potential investors can go and do their own research on who I am, how I'm thinking. And then based on that, you either like me or you don't. Right? You either like me or you don't, and then you can invest based on that. Okay. We're doing it a certain way. I don't want to blow up our company. I don't want to blow up my money. I don't want to blow up my friends and family's money.